Welcome back to Couples Trading Lab. It's Sunday, so today we're preparing for the week ahead.
We're breaking down SPY, QQQ, semiconductors, AI momentum, and the setup standing out to us the most ahead of this week.
Last week, the market experienced a very aggressive momentum expansion phase as we can see on this daily time frame chart, especially across technology, AI, and semiconductor names. The big question now is whether buyers can continue defending these elevated levels or whether we're finally going to start a pullback, seeing momentum cool down after such an aggressive move.
So today we're focusing heavily on market structure, momentum conditions, sector leadership, and where price may start approaching equilibrium again.
First, we're starting with SPY because that continues defining the broader market structure. SPY is trading around the 737 area after an extremely aggressive expansion move off of the April lows.
And price is still holding bullish structure inside of this larger rising channel, but we're also pressing near that upper boundary of trend after several weeks of near vertical continuation.
As we can see, the S&P 500 SPY on this chart has been testing the upper boundary of it. We are very overbought from the 20 EMA line, which we'll discuss shortly. But as we can see, um, several years ago, from 2019, we had a very similar setup where the market continued to grind higher inside of the rising channel, and eventually that led to a larger pullback. So it does seem like we have a similar setup, and whenever we do get close to the upper rising boundary, we do get a pullback either to the 20 EMA line or down to a much larger support level before buyers showing up. Now, for me, what I look for whenever we get these very large vertical moves, due to lack of support, the same rate of speed that we move up higher on, we usually get a pullback in a similar fashion. So, what you can do is you can look for these cluster zones, which are known to be liquidity zones where price can come back down to. So, for the S&P 500, we're currently trading at 737. For me, an area where I'm looking for to get back into the market is around 708 to 710, just where the 20 EMA sits, where that smart money demand zone sits. The important thing here is the separation from the 20 EMA. SPY's 20 EMA is still down near 712, which means price has expanded aggressively away from its momentum equilibrium area.
And when market begin stretching too aggressively away from the 20 EMA during momentum phases, traders have to stay careful about emotional chasing.
That's one of the biggest mistakes newer traders make. They see strength and assume they need to rush into the move after the expansion already happened instead of waiting for price digestion, pullback, or equilibrium retests where risk to reward becomes much healthier.
And now, when we shift over to QQQ, the extension becomes even more obvious.
QQQ is trading around 711, while the 20 EMA is still near 662. That's a massive separation. The move has been incredibly powerful, especially after reclaiming structure from the April lows, but this is also where momentum starts becoming overheated for the short term.
The RSI is already deeply elevated and price has gone nearly vertical.
And this is where I use the 20 EMA almost like a momentum reset gouge. During strong bullish expansions, price can separate aggressively from the 20 EMA, but eventually markets usually rotate back toward that area to cool down momentum, rebuild structure, and establish acceptance again, as we have seen over and over and over from this chart that we're looking at. You can see we have never in the history of the market gone this overextended.
So the question this week isn't whether QQQ is bullish. Structurally, it absolutely is. The real question is whether buyers can continue defending this elevated level or whether the market finally starts contracting after such an aggressive expansion phase.
And that transitions directly into SMH, which is the semiconductor ETF, which might honestly be one of the most important charts in this entire market right now.
And SMH continues acting as one of the primary leadership sectors driving technology and AI momentum.
But this chart is also a perfect example of why traders need to understand the difference between strong trends and favorable entries.
SMH absolutely still looks bullish. Structurally, the trend remains intact, momentum remains strong, and buyers continue defending the 20 EMA aggressively underneath the price.
And again, this is also where traders often get punished chasing momentum late into the expansion phases. A lot of these semiconductor names have already experienced massive vertical moves in a very short period of time.
And when price starts stretching aggressively away from the 20 EMA like this, risk increases substantially for late buyers because even bullish stock eventually need digestion phases.
And that's what we're watching closely for this week. Not whether semiconductors are strong, because they clearly are. The real focus is whether these names continue holding structure constructively or whether we finally begin seeing momentum move into contraction and pull back towards where the equilibrium is. Now, the equilibrium, as we can see from this chart, is for me is going to be around the 20 EMA line. The market has always expanded away from the 20 EMA, came back down, retested the 20 EMA, the bullish momentum, and then that pushes the trend higher as demand continues to show up within that given sector and price.
Names like Nvidia, MU, SNDK, and INTC are all showing very similar behavior right now. Extremely powerful momentum, strong institutional participation, but also increasingly extended conditions.
MU and SNDK especially have gone almost parabolic recently. Those are not the normal types of charts where I personally want to emotionally chase strength after the expansion has already occurred.
Instead, we'd rather wait for constructive pullbacks into support or retest towards 20 EMA where risk reward becomes cleaner.
So, overall, the broader message this week is the market remains structurally bullish but tactically extended. Momentum is strong, leadership remains intact, but patience matters here because some of the best opportunities come after price cools down and not during emotional momentum expansion phases like we are seeing at the moment. Now, we're going to share our favorite setup of the week.
And it is Tesla. Tesla is starting to show a bullish shift on the weekly time frame. Price is breaking out of a downtrend line and reclaiming above the 20 SMA, which tells me that buyers are starting to regain control after the pullback. What makes this setup interesting to me is that the momentum building behind it. TTM squeeze is improving, the RSI is pointing higher, the volume is increasing, and the momentum arrow indicator is pushing up. That doesn't mean to chase it blindly, but it does show that the setup is leaning bullish. The main level I'm watching is at 432.40. If Tesla can break and hold above that level, I'd be watching for a continuation towards 445.80, then 468, and possibly 475 plus if momentum keeps expanding.
Personally, the way I see it on Tesla chart, I really do agree with Rainbond's setup here. I strongly believe that the stock is now poised to see all-time highs. We have been digesting for about 5 years now, and the price has held significantly well despite Tesla going through what I called an identity crisis, moving away from a saturated EV market to now getting into robotics and AI. And this is a very, very crucial moment for Tesla. They have been teasing us with the robotics and the improvements that they have been getting. And there's a great chance that we're going to get that catalyst that'll really push Tesla towards all time highs. So it is one of those stocks that we are buying for the long term, that we have the conviction for, and we believe is going to join the market leaders as an AI stock. And that concludes our Sunday weekly watch list session. If you enjoyed this, please give it a thumbs up, subscribe to our channel, leave a comment on what your thoughts are, what you think about the current market conditions. It has been absolutely historic, to say the least. Yeah, thank you so much for watching. We hope you have a great week ahead of you. Take care.